Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we are doing what we do each and every day, identifying future opportunities in the markets from an educational perspective, both in breakouts as well as reversals. The ES yesterday did about what we expected it to do. There was a very strong move down right at the open, followed by a bit of a retracement. And so today we're up a little bit, but we were up about 5% in the pre-market. Now we're up less than 0.5%. I believe that we're going to continue our move down. Let's go ahead and dive in. So the S&P this morning is up about 0.5% as we are seeing that our downtrend is continuing. Now, we did get a rally in the overnight, which actually caused us to have a brief period of a lock limit up. And now we're trading back down from that area as we fell on the European market open, and continuing to fall with a fair amount of speed. So I believe that we're going to continue to fall and probably go again a bit lower today. Should be another fairly large movement day. As I'm looking at our daily candlesticks, we can see that we are, we've popped up a little bit. I think our next leg down, when looking at this on the monthly chart, we talked about the fact that our next really clean monthly demand comes into play here at 2170. So with monthly demand here at about this level, this is where I'll be identifying probably, my first real good, strong target for potential reversals, price coming back down into that region. So looking at this, as far as what I would do today, I think that we would look to see, do we get any basing in front of this level? If we get basing in front of this level, you've got a basing opportunity on a breakdown. That would be the first trade that I would say. Secondarily is that we've got a nice little move off of the European market open here on a 15-minute chart. This was our move down in the overnight sessions after we had our limit up, and then as soon as the European market opened, essentially we sold off right away once we were able to get back in there, and it was just a short covering rally. That's all it was. So now looking at some of the levels that we see that are formed, I've got this little area here as a potential reversal on a 15-minute time period. And supply levels have been holding pretty well. It's demand levels that have been unable to maintain any of their structure. Looking at the Nasdaq as well, same picture. Now the Nasdaq, yesterday, by the way, we had talked about the fact that we believed that the markets would go limit down right at the open. That's exactly what they did. And then they traded right back to where they went limit down in the pre-market before then reversing. So leave me a comment down below if you're able to catch that and make that play. That was really the best trade of the day yesterday. That's what we spoke about in the daily market commentary as well as in the live trade room the night prior. So hopefully you're able to take advantage of that. Don't let these markets paralyze you with fear, because they are actually respecting supply levels. They're respecting supply levels and giving us decent entries when we look at supply. Same thing goes with this one here, this area of breakout potential down here. Remember, all of our demand levels we would anticipate would be confirmation levels only, and for the most part, those are not going to hold through. So we're going to want to maintain looking at short opportunities as the market comes down into areas to get short. Crude oil yesterday. So in crude, we had this 29 area was the level we had kind of spoken about a long time ago on the daily, right? So we're talking here about the daily demand, and I got to go back more. Here we go. This was our daily area. Now, we didn't anticipate that daily area holding all that well. When I look at it on this time period chart, let me remove this level here. We may get a little bit of a pop higher before then rolling back down. So that little supply level does indeed exist up above in this region here. Now, we've not been able to kind of get up into that area, and we're just chopping a bit sideways. So I'm going to put this area right here as a potential breakdown level, 28.48. If price comes down into here, we see some basing for price to fall a little further down from this region. Next would be gold. So looking at gold, yesterday we talked about this supply level up here in gold on the 15-minute chart. So when I go to my 15-minute chart here in gold, you can see that we had this little wick over wick area. That's the level we identified during the daily market commentary. Price rallied back up into that level. We got a nice move away. If you didn't take the first move away, you got another opportunity, and it's traded down from that zone. So now I'm going to remove that level. That trade worked out really, really well. Remove that level, and I'm going to look at this little 15-minute level right here, which is a very recent zone, to see if we get another shorting opportunity right there on the 15-minute. And there we're looking at 1481 by 1486. I guess I should tighten that level up and make it a little bit more precise. So if I make that level a bit more precise, it looks more like this, 1482.6 by 1485.3. So those are the ones that we would look for. All right. Now, heading into our bonds and currency market. So in the ZN, yesterday we talked about the fact that we didn't really want to do too much in the bond market, allow the market to digest this quantitative easing, see what happens. And we're seeing that sideways price action still is holding true. I think there's a chance we're going to trade all the way down to here. So if you wanted to try a breakdown below here, I think you've got to trade with a target down here at this gap fill area. Now, I don't know that this gap fill area makes for a great long because we're still in a bit of a sideways price action, but you can look to this as definitely your first target and possibly even a reversal in here. Next would be our breakdown in the Aussie. So our Aussie breakdown was very effective yesterday as we broke down below this this level in here. Now, if you stayed in it, you got rewarded very handsomely. You may have gotten out of the 6 candle rule, out at a break-even trade, which is okay as well. And if you missed that break-even or that breakout trade, I think you may get another bite at the apple right in here if price returns back up into this region in here. So keep an eye on that level, price rallying up into here for a potential reversal in the Aussie. The euro, we're coming down really hard in the euro as we came down hard in the overnight session. We had this little area down here, this potential reversal point. I don't know that I would want to take a long in there for an extended period of time, but we have a really nice wick over wick level that was created right here in the euro that I think is a pretty clean zone for a reversal. Now, we may get a bounce off of here if you want to try the confirmation long. It's a very small area, so your risk is pretty small. Next, Canadian dollar. So in the Canadian dollar, we had our breakdown from Sunday night, which continued to move. We've come into our daily area of demand. I've got to pull the weekly in order to see it, but this is our daily area of demand, almost to our lowest point in the Canadian dollar in many, many years. So looking at this, we would look for a rally up into a strong area of supply. So for now, I'm going to wrap my lines around this area up in here for a potential reversal. 71,476 by 71.60. Next, Great British Pound, Japanese Yen. So looking here at the pound, we've come back down to a little bit of a pound demand area, knowing that we're in a confirmation territory only. If this rallies up, I think we could get a decent little rally. Now, our downward momentum in this is very, very strong, right, as we're coming down really hard. And this would be our 4-hour area of demand. Let me actually change this level a little bit to encompass the 4-hour zone. So that's the 4-hour demand level. And if you decide you want to take that, remember that you have supply, your opposing supplies right here. Now that doesn't look like much room, but that's a 3-to-1 reward to risk from this little 4-hour level. So it might be worth taking and taking a look at down in here, as long as you get the confirmation type of an entry. Okay. Last but not least is our Japanese yen. So our Japanese yen levels are really just kind of far away. We're staying sideways in the yen. No real trend direction identified. So for this one, I'm just gonna hang tight. There's nothing really for me to say and to jump in on this particular opportunity. So one thing I've gotten a lot of requests from lately is for people that are looking at individual stocks, and I will say this. So, like for example, Apple. I was talking about it last night with somebody in a chat room that we're part of. You know, we've seen some of these stocks really come down hard, right? I mean, if you look at say Apple, which is typically our bellwether stock in the economy. Apple's down about 26%, so actually performing a little bit better than the market in general as it's all coming down hard. But you need to start looking at weekly and monthly charts on these individual securities as well. And when I look at Apple, I don't really see a level of demand in Apple worth leaning on until you get down to here, right? Down here at about 220, 225, you start to see that Apple, okay, that might be worth exploring at those levels. The hard part about this is that you have a very, very high implied volatility, right? So implied volatility is through the roof. So how can I play it? Well, you certainly don't want to just buy a call or just buy a put in these areas, but there are opportunities if you use spreads. Now, I think what's important to remember is that if you use spreads, you have to use risk graphs. You've got to use risk graphs if you're using spreads. And so I'm going to put a link to using risk graphs at the end of this video. Hopefully it'll help you with them. But if this is something you're interested in, like you're going to start to see stocks that people have been trading for a really long time come down to areas where people are more comfortable stepping in and being buyers, right? We're not there yet in most of them. Most of them, I think we've still got a little bit of room to go in some of these positions. But I mean, you're getting a lot of stocks, and frankly, some of them are bellwether companies that ExxonMobil has been cut in half, right? In the last this year, ExxonMobil has been cut in half. At what point does it become a really good buying opportunity? I mean, we're down to the nearly down to our lowest point in ExxonMobil in over 20 years. Stocks like Boeing, certainly Boeing is really, really taking it very, very hard. So where do I find these good opportunities and these good levels? There's going to be a time and a place to get back in. Do I think that we do it now? No. I think that I need to see some strength in the overall markets first. And the big thing that I'm still looking for, like I said earlier, is, where on a monthly chart, let me remove these lines here, where on a monthly chart am I seeing areas of demand? And I really see our first untouched, fresh demand area right down here in the monthly. Now, we did have a monthly area of demand back here that we were, that we just kind of stalled in, got a little rally, and then blew right through. And the same could happen here. We could pop right through that. If we break below this monthly area of demand, we start to look a bit deeper and we start to talk about, this area of demand here or this area here. And we've got areas of demand below us that frankly are going to be pretty scary for the retail investors. By the time we get to this region here, we will have had a drop of, let me get that number right. That looks like about 36%. That'll be about a 36% decline once we get to this area in here. I've seen estimates as high as a 60% drop in our overall markets, which would put us at about this area of demand here, which is back to essentially our highs before the financial collapse. So all of these things are viable and potential, but just follow what the market gives you. Don't try to jump in front of a moving train. And that's, to me, that's with individual stocks as well. There's going to be opportunities to pick up some of these individual stocks at a much lower price balance, at a much lower, price basis. It just may not be at this exact moment yet. So that's all I have for you today, everybody. We have an open forum session on Wednesday evening. If you're a Traders Army member, open forum, come and ask any questions you want. We love to have you in our open forum sessions. So go to tradersarmy.com, subscribe today, become a member, join us for the open forum tomorrow night, and I will talk to you soon. See ya.